Hey guys, Landy here. We're going to go over some possible bounce targets. For those of you watching this on YouTube, hello and welcome to Landy's Crypto Corner. Today is March 10th, 2023. We're just going to take a quick look and follow up from yesterday's video. I'll link the full analysis on the appropriate social media platforms down below. But I did a pretty thorough analysis of price action yesterday. This is just going to be a follow-up of that and kind of looking to see where bounce targets are headed. I think it's fairly clear if you've been trading for a while. If you haven't, that's okay. You can just follow my lead with some of this, and I'll give you exactly what I'm looking at here just in a moment. So first off, I want to go over Stoke momentum. You can see that it is pointed to the upside right now on the daily, and we are currently trading above the lower second standard deviation. As I said in yesterday's video, it's very rare when Bollinger Bands are expanded like this that we spend too much time trending below the second standard deviation, and very, very rarely do we see things down below the third standard deviation in terms of closures. Often we see spikes towards the third standard deviation, either to the upside or the downside. It's only once we see price action coming off of a very, very tight contraction, like we saw back in January, that we see closures consistently above and outside of that third standard deviation. And often, it's fairly rare when you see expansion like this of the Bollinger Bands that you see closures above the second standard deviation. So this is a fairly aggressive move to the downside. There was a bit of consolidation and contraction in price action, so we did get a cool down in BBWP. That's RSI, but we'll take a look at that in just a moment. But BBWP did get a slight contraction here, but kind of trended sideways. Now we got to pop up because price closed below the first standard deviation to the downside here, and then subsequently two closures below the second standard deviation. So where are we looking in terms of possible upside short-term targets here, especially with weekend price action? It can be a little flaky. So what I will say is, at least for right now, primary upside targets are going to be the first standard deviation to the 200 EMA. So around that 21,500 to around 21,800. I am, looking for possible deviations above the 200 EMA. And if the 200 EMA is closed above and we close above the breakdown candle here at 21,825, I would be looking to run that lower high right here from March 5th. And that lower high is coming in at 22,654. So a closure above there, 22,655 on a daily. I am talking daily time frames here. I would be looking for price action further up, probably a pop back up towards, generally about 22.8 at the basis, all the way up to around that first standard deviation to the upside at $24,000. Then we kind of evaluate things from there, but take it one step at a time. If this is going to remain a downtrend, typically what you'll see is things will come up to the first standard deviation and close, wick above, maybe to the 200, and then close back below and then resume trend to the downside. Now, we did get decent support off of this 200 SMA. If we close the candle in a three-candle structure like this, this would be a reversal pattern indicating targets further to the upside here. If we throw on horizontal support and resistance, I know it muddies up the chart a little bit here if you're on a smaller device trying to look. So right now, primary upside resistance is going to be the lows and technically the high over here as well. So around 22.2 to 21,366. I still would look at, even if price did start to trade up there, I would look for spikes in around that first standard deviation at 21.5, 21,550 area. And then subsequently, if lower term timeframes do begin to trade above there, we can start looking to around that 21,750 where the 200 EMA is trading to around the low side wick at around $22,000. Above $22,000 on a closure, I believe we will go and we will run that lower high at that 22,654. Now, of course, back below this wick low, we're looking at 19,500. So we did fulfill the primary targets that I was proposing to the downside between 19,000 and 19,500. Some exchanges did hit 19.5 and under, but here on spot price action just swung below the 200 SMA. and popped right back up. So it's close enough for me to call that target fulfilled to the downside. And of course, we are seeing that reaction of the pop off of that pop up off of that 200 SMA. So another quick look at this is to throw, excuse me, to throw a swing chart on here and combine that with the horizontal support and resistance. I'll turn off my Bollinger Band indicator here. And you'll see that, you know, we have where the current swing low is possibly being set. You know, we have to close this candle above yesterday's open, and we can have a 3-candle low structure being set in there. But as it stands right now, you know, swing low kind of coming in with these couple of swing highs during this consolidation just before the pop up to around 21.5 and then the FTX crash. So if we do break down below the 19,570 or so on a daily closure, I would be looking to head back down to somewhere generally around that 18.5 to $19,000. So somewhere in this area between, you could even call it 18.5 to 19.5 as a range. If it did break below there, then we start extending those targets down to the swing highs down here at around 17,500 or so, which come in alignment with this wick low over here. So we'll just throw a horizontal on there. Kind of doesn't matter if I use a ray or a regular. We're going to use a ray. Executive decision. We're going to use a ray here. If it's actually going to snap to it, come on. Let's zoom in a little bit and actually snap that to the swing low here. There we go. Sorry for subjecting you to watching me struggle to use the tool there. But either way, that's kind of what I'm looking at right now to the upside. You know, around that 21.5 to 21.8. If we do start seeing things trade back above, you know, I would say this low and close below or close above this low that was set in the consolidation range before the next two highs. The close low is going to be 20,675. So if we do see a daily closure above there, you know, I would be looking to around that 21,366 wick low, with primary targets are up around where I had previously spoken of with the bands here. And that's going to be around that 200 EMA for standard deviation area at 21,550 to 21,750. If we can see a closure above there, quite honestly, I think things will start trading back up towards that high. Around probably where the 20 simple is going to come in, around that 20,000, you know, 560, 660 high area. So that's what I'm looking out for. I don't know if that's necessarily going to happen over the weekend, but that's what momentum is telling us right now. If we see a closure above yesterday's open, and keep in mind that yesterday's open was 20,366.97. So if we do see a closure above there in today's candle, I would extend those targets up. Generally speaking, for me, I'm just going to be using the 21,550 area as my area of interest, as I do think it's going to be pretty key to determining whether or not this establishes a continued trend to the downside. So that's going to be it for me today. I'll try to have a video out at the weekly close. If it's not going to be Sunday, it will be Monday. Other than that, I'll do some updated charts or things like that if there's anything interesting that pops up, both in the Discord, and I'll throw some charts there on Twitter. You guys have a wonderful weekend. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, stay safe. If you're watching this on YouTube, it'd be really helpful if you could go down there and give me a like and a subscribe. Would help out if you found any of this information useful. Other than that, I'd like to say thank you again, and Landy out.